Hey, everybody, welcome to Love and Relo, the voice of the relocation industry. I am your host, Ben Cross, and I am so blessed and honored to be here today with you on this Monday, January 25th. I'm so excited. I got some Wisconsiners. I don't even know. Is that which is proper? Which is correct?
Wisconsinites is right. Yep.
Wisconsinites, just go with the gut. Gabby Bachhuber, Rockwell Automation. How's it going, Gabby?
Great, thank you.
Good to see you. And Chris Lagerman, WHR Group. How are you doing, Chris?
We're doing okay. All things given. Yep.
Yeah. That was a tough day yesterday. Well, at least you had a good Saturday, right? The pork chop, the Brussels sprouts. I mean, right? Michael Bailey, and now Michael Bailey, Premia Mortgage. Michael, where are you coming to us from?
I am from Michigan, southeastern Michigan, just north of Detroit.
So we got like a little Detroit, Milwaukee thing going on.
Mm-hmm.
Okay, interesting. Very cool, very cool. I'm here in Detroit still. I haven't moved to Texas. And hey, if you're watching right now, hit that like button, throw a little comment in there, give yourself a shout out. Let me know who you are, where you are, what you're up to. We got some people checking in real quick. We're gonna kind of check in, show some love here. Couldn't do it without y'all. Michael Quigley, Scotties. That means something to y'all?
Yes, it does.
What's that mean?
Kind of short for Wisconsinites, Ben.
Oh, Scotties. Yes, Scotties. I don't know if that was Irish. I don't know if that was like a Irish Canadian. All right. Stacy, happy Monday, friends. Looking forward to this great lineup. What's up, Stacy? Love to hear your questions. Tim Quirk, go Pack Go. Feeling the same way in Western New York. Yeah. I got it twice, didn't you? Jason Rollins, hi from Foxborough, Mass. TB12. Still repping, huh, Jason? Still repping. All right. Man, just shouting out our exes. Beth McSkimming, hi from Xenia in Chicagoland. What's up, Beth? Alan King, tuning in from a snowy Germany. I think we all got snow on the ground right now.
Mm-hmm.
You guys got snow on the ground up there in Wisconsin?
Oh, yeah.
Yeah.
Oh, yeah. We're getting more tonight, too. So we'll see.
The Cream City, blanketed.
Yeah.
Nice. Let's see here. Oh, Stephanie checking in. Hey, Gabby.
Perfect.
Nice. Stephanie, still got to get you on the show, Stephanie. I see you out there.
Absolutely.
Victoria McCullough, hi, Ben and guest. What's up, Victoria from the DF Dub there. Valerie McKenzie, happy Monday. Stellar Group, Deluxe, rep in Detroit. Mariella Benitez, hi, Gabby. Love your shirt.
Oh, thank you.
Isn't that nice? Look at that. Look at that.
Yes.
Anybody want to comment on my shirt? I'm right here. Just let me know. Jack Champel, hi, all. Great panel. What's up, Jack? Using those free exclamation points. Appreciate you, Jack. Can't wait to hear your opinion on this. Yolanda, hello from the Netherlands. Zach Stevenson, our wine winner from last week. Looking forward to a great show. Hello, all. Actually, we should promote that real quick. We're doing an 8 weeks of giving wine promotion. So we are drawing 2 winners every week. We're giving away 2 bottles of wine. Sponsored by our good friends there at First Tech Federal Credit Union. So go ahead and register below at loveandrelo.com/community. Loveandrelo.com/community. Just put your info in. We're going to be drawing 2 names every week using our digital Wheel of Fortune, courtesy of Tim Quirk. Shout out, Tim. Thank you so much, Stacy, for running that. Zach, look for a bottle of wine. Get your address to Tim if you haven't already, or just put it in the comments. It's more fun. You never know what you're going to get. Stacy Huff, hi, everyone. I'm looking forward to learning more about what is going on with mortgages and appraisals in today's environment. We'll start with that. We'll come back to that in a minute. Stephen Meyer, what's up, drivers? Stay safe out there. Christina Swank, great way to start the week. What up, Swank? Dan Susko, hi, all from Detroit. Dan Fonseco, Connecticut. Amazon Logistics checking in. Tom Brune, Rockwell Premia and WHR Group in the house. Look at this. This is great. My girl Erica, what up, boo? Janet Turner, hey, looking forward to today's show. Look at this. Yeah, see, she was ducking me.
Yes.
Then she comes out for Gabby, and if she hides back again, she's going to hide on me again. It's okay, Stephanie. It's all right. Jessica Miller from Global LT, what's up? Erica Burton is sharp as always. Thank you. Can we just go back just for a second? Erica. What's up, Erica? Appreciate you. Deborah Hansen. We'll get to it soon. Mary in Grand Rapids. Nicola from, how do I say this? Heilbronn, Germany. Nice to see you. What's up? So real quick, you know what? Let's just go back here. And let's just set the table here. Stacy asked kind of the great table setting question. And this really came about, Gabby, because you had made a post. And today, by the way, if you don't know, we're going to talk about mortgages. We're going to talk about appraisals. We're going to talk about buying and selling homes right now in COVID from a relocation standpoint, as well as just like a consumer standpoint, right? Because we're all people with houses and stuff. But Gabby, you had made a post on LinkedIn kind of talking about this. Gabby, where did that come from?
Yeah, well, let me start by saying from a housing perspective, I'm working in my children's room, which is, you can see behind me some
I
of
thought
the
that was your stuff right there.
some of
The
my
Batman.
children's fun things. And I think I moved over here for a few reasons, but one, to just make the point that space is so important right now for all of us, a lot of us as we're working at home and trying to figure out how to balance our work life, our home life, our other kinds of lives. And it's just a challenge for me and my family as we kind of go through this, just like personally. So
I think we're all going through that right now, too, right, Gabby? I mean,
exactly.
Chris and Michael, real quick, before we kind of get into Gabby's point there, sidetrack, how has this COVID thing changed the premium you put on space and the way that you look at the space of your personal home?
Well, for me, I'll tell you that I'm now working from home for the most part. I do go into the office occasionally. So for me, it works out well. I have a pretty good space here. I'm fortunate that I have a nice space to do that. I feel sorry for people that have to share a kitchen table with family or something like that, or kids. But I have a nice space, a good setup. But it's still.
You have a nice setup there, man. Can we co-work over there?
But I do miss working with the people in the office, though. I miss seeing them every day like I used to see them. And I will get back to that point at some point, maybe not 100% of the time, but it is nice to be able to work from home. There's a lot of advantages I see from it, from my perspective.
Chris, are you seeing this with you personally or with people in your organization?
No, yeah, absolutely. I mean, I think we're fortunate because we have this big, beautiful office building we can come into if we want. But we also have the flexibility to work from home if necessary. And I think with the advent of this kind of technology that we're utilizing today, there's so much you can do. But at the same time, I mean, nothing replaces kind of the interactive feel that you get from a eyeball to eyeball environment. So, there's certainly a lot of challenges to overcome, but I think we're fortunate at the same time.
So Gabby, going back to your personal situation there, so you were seeing you were feeling tight, so what's going on now? What did you decide to do?
So, we're looking, my family and I are looking in the Milwaukee area for just some space, a bigger location. We are trying to stay in the city in Milwaukee. We love it. We have our kids here and in school. And so it's just a place we want to be. But when we started this journey, I don't know, maybe a month or two ago, it became clear that nothing is available there. And when something is available, it goes sometimes within hours. So I put a post on LinkedIn just asking some relocation colleagues, because I work in immigration, so not in the immigration space every day, but I just asked a question: what is going on? I'm late to this party because it is really intense, and I think it has been for about, I would say, probably a year. I mean, and we could talk about what it's looked like, but it's definitely a situation that I think is quite incredible. And I don't know where the end is going to be with it, but it just feels like a good conversation to have in our industry about what's going on. What's the appraisal process like here? Are houses really going at the rate that it's being offered for or sold? And what's the story here? What's going on? Yeah.
So let's break this into pieces here, right? Because one is the issue of the lack of inventory. So Chris, I'd like to hear you comment on that, because I mean, you guys are a brokerage, I believe, or broker authority, right? I don't know. Anyway, so you guys deal with real estate transactions all the time. So what are you seeing like nationwide? I mean, is this a national problem? Is this a regional problem? What's driving this? When did it start? Help us understand.
Well, I think just in general, there is a limited amount of supply. And whenever there's a limited amount of supply, you have all these different buyers who are all kind of, jumping at what's available all at the same time. And so, as a result of that, you start to see, in this case, and probably in the past, I would say 24 months, maybe even longer than that, you're starting to see kind of an escalation in those home values. So
this predates COVID, is what you're saying. I mean, you're saying 24 months, and because I kind of thought it was a COVID thing, but you're saying this predated COVID.
It absolutely did. Yeah, I mean, I think the limited amount of supply, I think, was exacerbated by COVID, certainly. But I think, this has definitely gone on. Probably the past 2.5 to almost 3 years, where we're seeing more buyers than available inventory. So there could be a shadow inventory that's out there. But
shadow inventory, is that like the dark web? What is the what's shadow inventory about?
Shadow inventory is essentially home sellers that are waiting to put their homes on the market for a variety of reasons. And I'm not sure if we're seeing that right now. We might be, but whatever is causing it right now, there is a limited amount of inventory out there, and we have a lot of buyers that are, like I said, going after what's available, which they're getting in bidding wars today.
Yeah. So you mentioned shadow inventory, Michael, and I want to hear from you as well. But you mentioned this. I was just visiting my dad in Oklahoma over the weekend, and he's been prepping his home to sell for 6 months to a year. They've been wanting to sell, and I don't know if COVID's changed their plans at all. I mean, I can't think it's helped their plans. But they're always like one repair away from selling, and for some reason they just don't ever feel like they're ready to do it. So interesting concept. Michael, what are you seeing?
Yeah, from a mortgage side, we're definitely seeing that. We've got people that need to buy a home because they're getting relocated, and they put offers in on a house, and they get outbid by someone else. We've had people on a regular basis that put 5, 8, 10 offers in before one actually gets accepted. So they're looking at all different houses. There's just not a lot of houses out there from an inventory perspective. So,
Michael, I'm sorry, but when Gabby said something earlier that I wanted to ask your opinion on, she was saying like she's looking for more house, right? Now she's working from home. I mean, as are most people, and everybody seems to need. Are you seeing the size of home that you guys are financing going up?
That's a good question. I don't know the specifics about the sizes of the homes, but it would make sense because people are finding they need more space. They need to have that extra office space, or an extra bedroom, or a space in the basement or something like that, because they are working from home. And it's not just work from home, it's kids with school. They just need that extra space that they didn't necessarily need before. There's a lot of people that are also moving out of the larger urban areas into more suburban areas, so outside of the big metropolitan areas, because they can get a bigger house for less money.
Yeah, for a long time they were people were talking about how the millennials were not buying homes, right? And they were staying in their parents' basements and et cetera, et cetera. But at some point, people, they fall in love, they get married, they want to have kids, and what's the next step, right? You want to buy a house, and that's where we're at with, which is right now the largest generation, right? So that also could be playing a pretty significant part in this.
Yeah, and I think absolutely. And the only thing I wanted to piggyback off of that is that I think it's excellent that more people are, investing in this way and buying homes, and more of the millennials are looking to buy homes. And I think it's the highest home ownership maybe is the highest it's been in like a decade. I don't know if that's, I think I saw that the other day, and that's exceptional, but it's just, it makes a tough market for individuals, companies. I know, Michael, you referenced relocation. Certainly for companies, the expense goes up and the process is so complicated, but did want to hit on that point. There is a bright side, but it's just makes it a little tough in other areas. Chris, to your point, I millennial tail into that, right? I bought my first house 3 years ago, way after I fell in love and had kids. I held out
as long as I possibly could. But when that second one was on the way, it was like, all right, you know what? I got to buckle down and buy something. And I did. And yeah, and that was, I guess I was 35 years old when I bought my first house, you know, and it was, you know, fairly, it wasn't like what you would call like a starter home really. And I just, you know, I bought that, and I was fortunate probably to get like in on right before, you know, the 2.5 to 3 year period that you kind of described, where there was this severe shortage in inventory, you know, and here we are 3 years later, and I'm turning around and selling it, and I get to be I'm the beneficiary of the situation Gabby finds herself in, right, where she's on the other side, she's trying to put offers in, and I fortunately, it seems to be a seller's market right now, where home values seem to be, you know, super high. And to your point earlier, I mean, I'll tell my story really briefly. You know, we put our house on the market like Tuesday night. We started scheduling showings Wednesday. We had like 11 showings scheduled. We had like 5 offers. And we had it, you know, we had 3 offers we accepted basically, you know, end of day into the morning after. We pulled it off the market, and we were sorting through those offers. And I'll kind of get to what happened with those offers, because that was a whole different story. And that kind of gets into the inspection and appraisal process. But that's kind of what I'm seeing. And we're seeing a lot of people actually in the comments here. I want to hear your comments. Hit those like buttons, put your comments in there. I want to hear your feedback on this as well. We got Ben Sukia checking in from England. I'd love to hear people across the pond. Is this a global phenomenon, or is this a US thing? I'm curious.
I know Canada. I think some of our Canadian friends can comment too, but yeah, no, good question. Yeah. Yeah,
let's see. Jenny Holler checking in from Columbus. Victoria McCullough says homes here in DFW, which is where I was house hunting last week. It's brutal down there. Homes here in DFW are also selling within hours or a day, multiple offers, way over list price. So the guy that was showing me our house that we're renting down there, but he's also helping people buy houses. He had to submit an offer by 3 o'clock. He said he was submitting an offer on a home that already had 36 offers on it.
Mm-hmm.
Wow.
Yeah.
You know, and what does that even do to values? And actually, I want to ask, you know, Chris, if a house has 36 offers on it, and you know people are going in with, you know, with over ask. I mean, I was going into rentals over ask on a rental just to try to get it because I had to make a move.
Yep.
What does that do to home values, and what is a house even worth?
Right.
Well, a house is worth what a knowledgeable buyer is willing to pay for it. So that is
slash a bank is willing to finance, right? Because unless that knowledgeable buyer has a suitcase full of cash.
That's part two, though. The bank needs to support that value, right?
Yeah.
And that's part of what the appraiser is called in to do, which is a whole. I mean, that's certainly a conversation I hope to dive in here a little bit. But yeah, the values are obviously going to go up from an appraisal perspective. You know, I think the appraiser will traditionally be low in their value in a bull market, and then they're artificially high in a bear market, and that's because they're always looking back, right? They're always looking at comps to support their value.
Yeah.
Help us understand what that process is for the uninitiated, for the people who haven't had the pleasure of sitting through a CRP examination. You know, what is that process like, that look back? Like how do appraisals come up? Because Gabby, wasn't this kind of at the essence of your question?
Yes, I said, well, and just to go a little bit into our search, we put in 2 offers, but before that, before we decided our offer price, we looked at comps, which you know, you can describe what that is, but comps are like maybe 6 months old, possibly, or a little. I mean, it depends, but I like the comps in market a year ago are not the same as this market. So how do you get the right comp to the appraiser to help them through that process? I don't know the answer, but that was what really went into our thinking around the price that we offered.
Well, unfortunately, like we talked about, because there's limited supply, there's limited comps.
Right.
So a mortgage appraisal is kind of that retrospective analysis where they're looking back to determine their value. And like you said, The older the comp, typically the more outdated the value. So then they're forced to, again, arrive at a value that all their training has told them, to look at the comps and make your adjustments, and then that's how you're going to arrive at your value. Very rare in the mortgage world do we see appraisers making any type of a forecasting adjustment. That's a reload term, but a forecasting adjustment to account for the fact that what we're seeing in today's market.
What is a forecasting adjustment? School us real quick to that term.
Yeah, so a forecasting adjustment is very specific to a relocation style appraisal, which is kind of a prospective analysis, right? They're asked to predict the future. What is a home going to sell for in the next 4 months? And so a forecasting adjustment can either, in a bad market where they're saying, okay, the market's going to get worse, it's kind of a negative adjustment. Or in times where they predict that the market's going to get better, they're going to make a positive forecasting adjustment. So they're going to increase the value of the subject property, whereas the comps aren't necessarily supporting what they're seeing.
So like in Zillow, when I'm looking at the value of my home, and then there's a break today, and then there's that dotted line that goes up, or dotted line that goes flat, or dotted line that goes down. That's that forecasting adjustment you're talking about. This is really good. Hey, if you're watching this right now, we got a ton of people on LinkedIn. That's awesome. Hit that like button if you haven't already done it. Throw a comment. I'd love to hear your questions for our experts here, as well as like your experiences, what you're seeing in each market. I'd love to know if this is happening overseas. I'd love to know if this is happening in all markets in the U.S. Obviously, DFW is one of the hotter markets, but I mean, it's happening in Milwaukee. It's happening in Detroit. I'd love to hear what you're seeing as well. But I'm going to ask you, Michael, the appraisers are doing their job and they're making their forecasting adjustments and everything like that. But what other types of appraisal techniques are you seeing and things?
Yes. Well, first of all, just to comment a little bit on what Chris said, it's true. The appraisers are always kind of chasing the market in an increasing, where the prices are really going up faster. And there are multiple offers. Many times people will put in a purchase price or sign a contract for something that's truly above the market value. Maybe if they put in, $20,000 more or whatever. As a home purchaser, you have to understand that it might not appraise for that amount. And you have to be willing to pay that extra amount of money out of your pocket. You can't put in maybe something $20,000 over the purchase price or the list price and expect to still be able to put 3% down. You're going to have to be able to possibly make up for that difference, because the appraiser, the value likely won't come in that much over the selling price. Again, once the home closes, then that will become a comp for somebody else in the area that is doing it. That's how the market.
But what's interesting though, Michael, you talked about 3% down, and that's like kind of the new normal, right? Previous generations always say, oh, you got to put 20% down, right? You never want to pay PMI. You got to put 20% down. Of course, there's been some studies that also show you could take that same cash, put it in the market, earning 15-20% return compound annually, and forget PMI, like whatever, right? Use other people's money. But so it's interesting. So in the case you just described, Michael, 3% down plus 20K if it doesn't appraise. But again, maybe not a deal breaker for some, especially if they just sold their house on equity.
If you're putting a big chunk down, then the actual value of the appraisal is not as important. If you're putting 3 or 5 or 10% down, 20% still is kind of the magic number. You do want to do what you can to get that 20% down. That's important, because in the long run, it will save you a lot of cash flow, for monthly payment.
But Michael, let me ask you this. If I'm a buyer and I go in, I'm like, okay, I love this house, dream house, relocate in the area, want to take care of the family, want to make sure they're happy. I'm going to plunk down, I'm just going to use round numbers here, $500,000 for this house. The appraisal comes back at, $450, right? I mean, I may have the $50K in the bank plus, 3% down or whatever I need to put down. But part of me is also like, well, gosh, if the experts are saying it's only worth $450, I don't want to be like a sucker and put down 500 and then 2 years from now, be upside down on this thing when this bubble bursts,
right?
And like, I don't want to be the guy that spent $500,000 for a $450,000 house.
Yeah.
Does that make deals fall apart? I mean, what do you see?
It absolutely can. Sometimes appraisals do come in lower than the purchase price, and sometimes maybe the right comps aren't used, but in many cases they are. It's not necessarily a bad thing if an appraisal comes in lower than the purchase price. In some cases, it could be an opportunity to renegotiate the purchase contract price. Now is probably not the best time to do that, because if there's a lot of offers on something, they'll just say, okay, forget you, I'll just use somebody else. Another, 5 other people want to buy this house at the purchase price. But sometimes there's an opportunity, like I said, to negotiate. But you can also kind of go back to the appraiser, or the real estate agents can provide comps to say, hey, this appraisal came in at 450, but I have all these comps that are similar that weren't used in the appraiser. So that's where the real estate agents can kind of assist and provide some information. And then we can submit that information back to the underwriter through the appraisal management company, and they will review it and see if they want to adjust their opinion on that. But we have to remember, and that's the one thing about appraisals, it is an opinion. It's very subjective. It's what that appraiser feels the value of the house is given the information that they have.
So,
go ahead.
Go ahead, Michael.
I was going to say, one of the things that's relatively new within the mortgage industry is automated valuations, where a physical inspection.
This is what I wanted to ask you about, okay? Because I want to tell my story, because I think this is where you're going real quick, right?
Yeah.
So Gabby kind of told hers. When I sold my house, I went through the inspection process, which was a whole nother thing. I don't know if we're going to have time to talk about inspections, but it was finally the third offer that stuck with me, right? And it was and it was actually a Premia relocation mortgage buyer, relocating, transferring from out of state, came up, bought my house. Cool. And when I heard it was Premia relocation mortgage, I was like, so interesting. I know people from Premia. This should be really interesting. God forbid, maybe I'll make a phone, but I'm just kidding. Anyway, point being is, though, I got through the inspection, and I'll be honest, I was really concerned with the appraisal, because I bought my house for, I'll be honest. I bought my house for $418, and I accepted an offer for $490 in 3 years. And I'm like, yo, this thing may fall through. Like, I'm really concerned with this, right? And so we do the inspection, we get through that, which was like a big relief, right? And it's like, okay, now the appraisal, the final hurdle, right? And that was like on Thursday. And then Friday, my realtor's like, yeah, Premia did a desktop appraisal, you're good to go. And I'm like, what? Well, what? Like, pop the champagne. We're through this thing, we're at the finish line now. I was like, I don't know what kind of sorcery this is, this desktop appraisal, but I like it. I want some more of it. What is a desktop appraisal, Michael? What is over there?
Actually, I can certainly appreciate, as a seller, you want to make sure that, hey, you got a good price for your house. You sold in a good hot market for a seller's market. And obviously your big concern is you want to make sure the property appraises for the value, so you get the purchase price, so the buyer's not coming back to you and saying, hey, it came in lower, I want to get a lower purchase price on this. So there's that concern. There's the concern that the loan is actually going to close and the buyer is going to qualify for the mortgage. So, those are the things that are on your mind. But from, your example, in the terminology may be slightly different. I don't know if the agent told you it was a desktop.
Yeah, I'm sorry. It may not have been proper terminology.
There's an automated valuation, which is commonly referred to as a property inspection waiver, or a PIW. So that's something that Fannie Mae and Freddie Mac, the investors on conventional loans, will allow. They can often say, from the loan officer, once you get all the information from the borrower, including the property information, they'll run it through the automated underwriting system, which goes to Fannie and Freddie, the conventional underwriters. Again, it's all automated. And, within seconds, they'll get a response back saying that, hey, this property either needs a full typical standard appraisal, like we're all used to. Appraisal goes out to the property. They do an interior inspection, exterior inspection, and then they come back and write a report, and then they send it to us. That's the typical standard one that we're all used to. Something that's relatively new is the automated valuation. That's the property inspection waiver. That's where they say, hey, guess what? This property falls in line. The purchase price falls in line with properties in the area. We accept the purchase price as the value of the property, and then we move on. If you don't want to do an appraisal, you don't need to do an appraisal, which is great from a lender side, because now we don't have to order an appraisal. We don't have to wait for an appraisal. We don't have to worry about an appraisal coming in below value. We don't have to worry about repairs or any of the delays that repairs could require. So that's if you get that appraisal waiver. Now, not every loan, not every property is going to be eligible for an appraisal waiver. And you have to understand that these investors, Fannie and Freddie, they have so much access to tens of millions of pieces of data regarding valuations of properties. And it's not just the property that you're looking at as a borrower or from the lenders looking at just the home. They're looking at the neighborhood, they're looking at the street, they're looking at the city. They know that prices are increasing or they're stabilizing or they're decreasing. So they have a really good idea based on the houses in that area, the square footage. If there's a past appraisal on the home, they kind of have that data. They know the square footage, they know the number of bedrooms and all that stuff. Again, that's all in their systems. So it's very easy for them to say, okay, you know what? I accept the value at $500,000 and we're good. We don't need an appraisal done on the property. So
Cool.
that's one option. That's the automated valuation, and that's relatively new. It's been going on since late 2017, I would say, for new purchases. It's been on refinances for a little bit longer than that, but that's been going on for a while. And the other thing that you talk about, Ben, is a desktop review. And that's why I say I think the terminology might be a little bit different. I think your purchaser got a property inspection waiver where they did not need to do a physical inspection of the property.
Can you pull their file and tell me how much it appraised for, just so we can negotiate a little? I'm just
And I'll tell you one thing about the automated valuation. If you get that waiver, and again, we always have to have a conversation with the borrower. Hey, you're eligible for this waiver. Do you want a full interior or exterior? Do you want a full inspection of the property done? Do you want an appraiser to go out there, or do you want to accept this property inspection waiver? And it's really been a big education process for the past several years, because I remember when this first came out, where we were able to waive these property inspections. I thought, well, that's just crazy. How can you do a loan without doing an appraisal on the property? So,
well, the inspection to me is even more important than the appraisal, because the inspection is going to tell you all the things that you don't know just looking around. Like the appraisal to me is like, if the inspection's fairly clean and it's in this neighborhood and it's this square footage and has this many bedrooms, that's kind of like math, right? But if like, you know, if I got a leak in the ceiling or something like that, I mean, that's what the, you know, the inspector's going to catch that.
Yeah, and that's
where I was getting hung up on
the terminology that they use, property inspection waiver, is very misleading. Property inspection waiver deals with the appraisal, not to be confused with an actual property inspection. We always encourage people to do a property inspection to make sure that there's nothing wrong with the property.
I was trying to discourage them from doing a property inspection.
Oh, you don't want
that's interesting. Yeah, I was like, listen, I've been through this before. This isn't. We get the comments right now are fire. Keep the comments coming. I'm going to try to get to all of them. Let's address some of these, because there's a lot going on here, including just some random stuff, right? Like Chris Lagerman. Okay. How did I nail it, Martin? You let me know. Let's see here. So I'm gonna get in here to. Oh gosh, there's so many great comments here. Jack's on fire here too. I can't wait. This is great. Victoria's going back saying, my son looked at over 50 homes in a month, couldn't even get a bid in. He finally won a home off market.
Yeah.
We call that shadow inventory, Victoria. It's like, what do you mean off market? Like in a back alley? Like somebody's like, hey, I got this house. What do you want? You know, I don't even know. They're buying houses on Tinder or something down there. Anyway, Laura's saying, pretty amazing. This is great. Alan King. All right, so let's hear some of these comments and kind of riff a little bit. We sold our holiday condo in West Palm Beach, Florida last September. I was so surprised that we got multiple full asking price offers. Yeah, as a homeowner, you're always like, yeah, my house has some warts, you know, and then people are just climbing over themselves to buy it. I also sold a house in the UK last summer and also got above full ask, and it shifted quickly. This was not what I was expecting during COVID.
Yeah.
Isn't that funny? Like, because we're during COVID, you're thinking nothing, you know, oh, everything's locked down. That's what we keep hearing, right? Oh, it's shut down, locked down. It's like, no, like, people are making moves.
Oh yeah. We've been in, I don't know, 5-6 houses just with a mask, you know, sanitizer, and just walking through homes. And it's just normal right now that you see other people doing that too. Open houses, no problem. I mean, it's incredible.
Yeah, I'd say March, April of last year, it kind of slowed down for a brief period because, homeowners didn't want people going through their homes. Real estate
Right.
agents didn't want to be, in person showing houses. But then after things kind of settled in a little bit, I don't want to say people got used to it, but
Yeah.
people got used to it.
Yeah.
We started to see it take off again.
Well, I think as they standardize the precautions, as we kind of
Mhm.
get used to the risk, kind of learn more about the virus, how it's transmitted, people took more calculated risks,
Yeah.
Annette says, greetings from Dallas, such an important conversation because it will not last forever, but how do rectify short-term high prices due to low inventory with a longer-term mortgages, and when inventory releases, those prices go down for a long-term mortgage process? I mean, that's a great question, Michael. I mean,
Yeah.
you guys are writing 30-year mortgages based on COVID bubble. How does that work?
Well, that's really a good question, because whether somebody gets a 10-year mortgage or a 30-year mortgage, we're looking at the value of that property today. There's no forecasting. There's no thinking, oh, well, it's worth $500,000 today, but in 3 years it's going to be worth 450. Generally, that's not something that a mortgage company looks at. They just look at the value of the property at that point in time.
This is interesting because Jack brings up a great point. So many good points here, Jack. Let's play the flip side of that, right? Jack says, what precautions are in place so we don't have what happened in the past regarding defaults because houses being upside down? Can't the same thing happen again where buyers are now buying above market price and bigger loans because of lower interest rates?
Totally. Yeah.
True, right? Because everybody's buying these houses based on what my monthly is going to be, right? So as long as my monthly is affordable, which is artificially low because the interest rates are low, but does it matter? Does that just become the new normal? But then when interest rates go up, what are y'all thoughts on this?
Well, if I could just comment on that real quick, Jack, obviously a really good question, and that's truly a thought that a lot of people have. What's going to happen? Are we just starting this? Is this bubble going to burst? Is the housing market going to see the same thing that happened in 2007, 2008? And the reality is what's going on now is totally different than what happened in 2007 and 2008, at least from the mortgage perspective. At that point, that's when you had appraisers that, yes, the markets were increasing as far as the values of the homes. Property values were increasing very quickly. You had, in some cases, appraisers working directly and very closely with specific loan officers. And you could have, an unscrupulous loan officer that's saying, hey, I've got this one buyer. We need to make sure that this property comes in at $500,000. And if you do that, I'll make sure you get more appraisal business. So that, coupled with people that were getting loans that maybe had negative amortizations, where the payment would jump significantly in 3 years, they weren't worried about
those arms, right? Those 3-year arms, 5-year arms, right?
They would simply refinance because they were just planning on the property value increasing significantly before those interest monthly payments really skyrocketed. Well, the problem is when the market really tanked, you had all these people with payments that were almost doubling or tripling from the original payment that they got in after the third year that they were in the property. So
and they couldn't refi because they'd have to bring cash to the table because they had negative equity. So they couldn't refi, and then they jumped.
They were upside down. They just bailed on the houses. That's when you saw the foreclosures left and right, especially in certain areas like California, Arizona, some other areas. They had a very fast, very high growth, but those are the ones that tumbled pretty fast because they had a lot of people in that particular scenario. When they foreclosed, you'd have half the houses on a street foreclosed. So that affected the value of the people that were making the payments on the home. So all that being said, now you've got, there was a lot of government regulation that was put in place after that. The Dodd-Frank Act that created the Consumer Financial Protection Bureau that put certain restrictions between lenders and appraisers. Now we have appraisal management companies. So when we order an appraisal for a borrower, what we do is we work with an appraisal management company. They're the ones that have a network of appraisers, and they're the ones that order and communicate with that appraiser. The lender has very, very limited ability to interact with the appraiser directly. So between the regulation and some of the things that have been put in place with the appraisals, That's one of the reasons why we don't think that this is necessarily going to happen the same way that it happened in 2007 or 2008.
Well, you also had, remember, we also had that Chinese drywall thing too. So you couldn't sell your house if it was made out of Chinese drywall, which all the houses were being made out of in 2006 and 2007. My cousin Matthew had that Chinese drywall down in New Orleans. But anyway, a lot of people are worried about this. And Michael, I'm going to just play devil's advocate here. That's what I do. You talk about the relationship between the appraiser and the mortgage company being kind of, we need to have I don't know if arm's length is probably the right term or not, but we need to have some distance there. But when you're doing desktop analysis, aren't those still in-house, and does some of that is that still a concern, or is that being done by a third party?
That's a good question too, and just some clarity on that. The person that, or the organization that makes the decision whether we could do a property inspection waiver, whether we can use the automated valuation, is not the lender. It's Fannie Mae, it's Freddie Mac, it's conventional conforming loans. Right now, it's not available on jumbo loans or FHA loans or VA loans. It's just a conventional conforming. So primarily, that's Fannie and Freddie. They're the ones that have the database of so much information. That's what they use that information for. Now, if they look at and they run through their automated system and they say the purchase price is $500,000, and through their system they think, oh, it comes in at $490, you're not going to be eligible for that property inspection waiver. It's just going to say, oh, you know what, just do the standard appraisal. You're going to have to do the on-site appraisal. You're not going to have that as an option to do that property inspection waiver.
Yeah. I just want to comment before we go to the next comment. I think Jack's point is really important to me, because we are my husband and I are putting offers on homes that are like, we have almost hours to think about it. It's like, well, people are putting 50K over, should we do 60? It's like it's incredible. So I think the point about this bubble and what are the bigger loans, what's going to happen, I think that is good food for thought for us, but appreciate this information. I didn't know about a lot of this, so this is helpful, certainly as a buyer, to know about these processes. But I don't want to forget Jack's point, because it really it hits home to me, for sure.
Yeah, it does. And I mean, I think we rely on the federal government to put some guardrails in place. But I also remember that the federal government determined some of the criteria back in 06, 07, 08 too, and they determined that some of these credit ratings on these subprime mortgages that were being bundled, and they were kind of complicit in some of the issues that occurred. So while I'm glad they're there, right, because people would do unscrupulous things, I also worry sometimes that they don't keep up with the market, because I think industry can be a lot quicker and more savvy to figure out and exploit loopholes sometimes. And Chris, did you have something that you want to say on this before we move?
Yeah, I think you should absolutely be keeping that in mind in your home buying search, because too often I think, home buyers and home selling and home sellers, it's such an emotional process. And when you get to the appraisal piece, just like kind of Ben said earlier, it's like you don't want the appraiser to screw it up. You don't want the appraiser to miss the value so that you have to go and start back over again. But I do think, especially for home buyers, you want to make sure that the value is accurate so that you are somewhat protected in your investment, because this will probably be one of your largest investments that you'll have, right? So you want to, and that initial value is really important.
So Jack's kind of being kind of a little pessimistic here. I mean, I think if it doesn't make sense, sometimes it doesn't make sense. But I sympathize with Gabby, because here she is, she needs space. Her family's growing, right? And like I sympathize, right? So you're like kind of in between a rock and a hard spot, right? You're in between a Zoom and a backdrop of Batman over there. So you're just trying to do what you can, and then there's just not enough inventory. And it's so interesting here, because somebody actually brought this up too. Mary brings this up. She says, we've seen the lack of inventory in Grand Rapids. And I think this is especially true in the Midwest, right?
Mhm.
And I'll comment. This is one of the things I observed when I moved to Detroit. And Michael, I don't know if you've seen this as well, or if Chris and Gabby, you've seen this in Wisconsin. But Michigan was really hard hit by the recession. I mean, everybody talks about 08, but in Michigan they talk about 07 because it started early here and it lasted longer, right? And what's interesting is I've seen a lack of investment, a hesitancy to invest and develop this area because the pain was so hard and so long here. And Mary's comment says we've seen the lack of inventory in Grand Rapids on the western side of the state since spring of 2012. During the recession of 08-11, builders stopped building new construction. Yep. Today it's more difficult for developers to get municipal approvals to build. Add to that a shortage of labor in the trades, yep, and higher cost in the trades. And they're just wondering if the ROIs, because before you start a subdivision project or something like that might take, 3 to 5 years to complete, I'm guessing. You want to know that the market's going to sustain for that long. And people are just really hesitant to put a bunch of cash into that, especially when there's other areas they can deploy their capital. Do you see, so going back to Gabby, right? Like, what does this mean to people like Gabby and people like me who are buying and selling homes? Do you see a influx of inventory or a right sizing that's going to happen soon? If Gabby holds on and doesn't put that $60K over ask offer in, is there a light at the end of the tunnel for her?
Boy, I wish I knew the answer to that. I mean,
am I giving you too much credit, Chris?
I mean, but I will say that we're riding an increase in these conditions for longer than ever before, right? I mean, we've been on this high since essentially 2012. At some point, we're going to see a downturn, and I wish I could predict when that's going to be, and I wish I really could understand what the ramifications will be or what the catalyst will be. But at some point, there is going to be a bubble that's going to burst, and whether it's going to be as severe as we saw during the Great Recession, probably not. I mean, that had a lot to do with larger forces at play than necessarily the housing market. Although the housing market was a bit of a catalyst to the whole financial industry going down, I think there are guardrails in place that'll protect us from that. But if you look at what we're seeing in the commercial industry, especially right now, I mean that's hurting big time. A lot of that has to do with COVID, but there are some signals right now that this is not going to last for a very long time. So it'll be
signals that the housing shortage isn't, or that what was signals that what's not going to last for a long time. Like, is Gabby going to need to go just take out a floor in an office building and say, hey, this is our new house? You got 3,500 square feet of Class A office space downtown Milwaukee, and this is how we're going to start living now. That's the only thing that's affordable now.
Yes.
Yeah, I mean, where demand outweighs supply. I think we might see kind of that become more in balance and maybe even shift a little bit on the other end.
What are we going to wait for? Gen Z to not have kids? I mean, is that what we're waiting for this whole thing to balance out? I mean, it's kind of like, or is it boomers getting out of their house and finally downsizing into the apartments? I mean, because my parents aren't leaving their house. They got a 3-bedroom, 2-bath down in Texas, and their property values at plus 300 something thousand for this little ranch. And I'm like, Mom, you need to move. And she's like, where would I go? I'm like, get an apartment. You won't have to trim the hedges and mow the grass and whatever. She's like, no, I can't do that. Like they don't see it.
Well, it could be housing affordability too. It could be to the point where, houses are more expensive than what people are able to pay for them. I mean, that could be a catalyst. Certainly, I mentioned shadow inventory before. I mean, a lot of people talked about shadow inventory with especially what you just brought up, Ben, where, the baby boomers are going to start to all go into assisted living, and they're going to sell their houses, and it's going to flood the market, and there's not going to be enough buyers because millennials are going to want to rent, et cetera, et cetera. We're not exactly seeing that, but there could be an event or a catalyst of events or a combination of events that causes the paradigm to shift a bit.
Beth, okay, we're going to go around the horn. One word answer for Beth, okay? Beth says, I purchased my home in 2016 and refied in October. That's key because there's a transaction cost in there. My market here is super competitive. Is it smart to sell while it's so hot? By the way, does anybody know where Beth lives? Just for context? No? Okay. Cool. We'll say Milwaukee. All right. So she purchased her home in 16. She refied in October. It's super competitive. Is it smart to sell while it's so hot? Michael, I'm going to start with you just because she mentioned the refi in October.
Absolutely. I will say, you know what? If you plan on purchasing again, that adds to the question. You know, if you're selling a home, you can absolutely take advantage because you're a seller. But if you need to buy a home again, are you really going to be in the same position where you were? I've got some neighbors, for instance, that they wanted to sell their home because they wanted to downsize and get something smaller. And they looked around to see what was out there, and they said, well, why should I sell my house for X amount of money and pay the same amount to get a smaller house? Because again, they can get a lot for their existing home, but they're going to have to pay a lot to purchase something. So I guess you have to take that into consideration as well, depending on what you want to do. If you need to purchase something to think about. If you have no intention of purchasing and you want to rent, well, you know, when the market's good for a seller, then that's certainly an opportunity to see if it's going to work out for you to sell it.
Chris?
If you're okay with renting, but on the flip side, you have probably historically low interest rates that you probably have with your refinance. So that's kind of a non-answer, but I would say if you're okay with renting, probably.
Gabby?
Yeah, and then I think you should do it. You could make some good money. That's
Sell
my
Gabby
only
the house, Beth. Sell Gabby
Yeah,
the
yeah,
house. Sell it to her. Don't take advantage of her, okay? Take off-market shadow inventory.
Yes, shadow.
DM it, okay? You know,
Yes.
put the real estate agent out. You know, call it good. I don't know. Realtors.
Love it.
All the realtors are going to crucify me. No, Beth. So my short answer is yes. Sell that thing. Turn around. Downsize. Put a 3% loan down. Use other people's money. Get a 2 and change percent APR on that. Take your 40, 50, 60, 80, 100 grand. Throw it in Amazon stock. Thank me later. All right. That's me here. Let's see. We all want properties, can't afford it. People are checking in. Victoria says, Beth McSkimmey, problem is you'll sell quickly and end up paying more for your new home. Yep. Charles says in DFW, certain price points are selling really fast, 250 to 450. High price points are taking a little longer.
Yeah, and that's a great comment in terms of what is selling. And I think in Milwaukee, I don't know if Chris has heard this too, but houses that are going for between 250 and 300 are like absent from the market. It feels like completely. I read that the other day, and it really strikes me as so true. Between those two figures, you don't see anything.
Does that mean that they're just popping up in that 450? Like, does that mean 350 houses are really just popping up as 450 houses because there's so much demand there that
they're just
price it there. Why not just price it higher?
They're just gone. That price for Milwaukee is just the sweet spot, I guess, and they're just gone so fast.
I mean, my real estate agent came in and literally told me, and I will do a quick little thing because I when I was going to sell my house, I was like, okay, I don't know what I'm going to list for. I think it's like going to be about 450. I don't know. I called in 3 real estate agents. I called in, the guy who advertises on the Kroger shopping carts, who thinks like he's the big guy around here. Okay, fine, call him. Call the personal referral, from down, from my buddy down the street, does all the family transactions. He swears by her. Okay, call her. And then I called Redfin, right? Because my buddy had a story about how they sold Redfin and it was great and made a bunch of money and didn't pay a lot, right? Brought those 3 people in. One gave me an appraisal. Redfin was at 424. The guy on the shopping carts was at 450, and the friend of the realtor that sold my friend's house and all his family houses was at 500. I mean, talk about a spread from 500 to 424. Now, I guess crazy. You could toss out the Redfin because that's just like kind of a, maybe that's not probably a fair apples to apples. But I was all over, and I was like, no, you never take the highest one because they're probably just trying to buy the listing, whatever. Well, I did take the highest one. She's like, trust me. She just said 500. We had tons of offers, and it, it sold super quick. And I guess to the point about where are the homes in that middle range, they're just bumped 50K higher than they probably ought to be.
Yeah.
And then somebody comes in 50K over that, right, Gabby?
Right, 100%. Yeah.
Yeah, and that's a good point. We talk about the lack of inventory and, these pricing wars that people are willing to get into. As a buyer, are you willing to pay possibly more than it's worth just to get into the property?
Right.
And that's kind of what Jack had mentioned earlier in his comment about, possibly going through the same thing that we saw, 10 years ago, 12 years ago. Yeah, there could be a problem if people continue to overpay for prices, and they're willing to do that because that's not going to last. That's not going to be able to be sustainable in the long period for people to be continuing overpaying for prices like that for homes.
This is so interesting. I mean, these comments are just fantastic, and I want to get to all of them. But we're kind of running out. There's a couple of questions here that I want to ask. We're going to just go a touch over. Jason Rollins says, should one buy down the rate? What is the deal with points? Points, yes, no points. What do you think?
Well, points are a good question. From the mortgage side, the main thing about points is it depends on how long you plan on being in the property. If you're only going to be there for a year or two, it doesn't make sense to pay points. And for everybody that maybe doesn't even know what that means, if you decide to pay a point, typically 1 point is 1% of the mortgage amount. That may get you 1/8% lower in the interest rate, or maybe 1/4%, depending on the product. So what that lower interest rate gives you obviously is a lower monthly payment. So maybe you're saving whatever, let's say $100 a month or $50 a month less in a monthly payment, and it might cost you $1,000 to get that. If you're going to be there for 2 or 3 years, it's not worth it to pay that point because you're not going to be getting that money back in the form of a lower monthly payment. But if you plan on being there for 5 years, I think typically the break-even point's about 5 years. I've not been a loan officer for a while, but I want to say it's about 5 years. So if it's longer than 5 years, yeah, then it's definitely worth considering paying.
Well, and the numbers you gave, which I know are just off the top of your head, but I mean, if you did $1,000 to save 50 to 100, it would be 10 to 20 years would be your break-even in that range. And I mean, let's be honest, most people don't stay in a house that long. So unless it's your forever home, and even then, right? This is really interesting. Annette actually asked a question. I'm going to ask Chris this question. Are employers helping any of their assignees with that extra over market cash to get a home and employee in place? It's almost like the opposite of a loss on sale. It's like, like a cash on top benefit.
In certain circumstances, yes. It's kind of like it's a COLA for having to go and buy into a more expensive market where they will help assist a certain percentage of your new home loan. I would say that is that level of benefit, which is a very super high, kind of the Mercedes-Benz offering of benefit packages. We don't see a lot of that, but they're certainly present in some relocation packages. Absolutely.
Yeah, I agree with that. We have a good number of clients, and especially if they have a good number of people that are relocating to a high cost of living area, Northern California, actually anywhere in California, sometimes they'll have a down payment assistance program. It's pretty rich. There's not a lot of companies that offer it any longer, and not everyone is eligible for that benefit, but there are a handful that still offer that. Yeah.
So interesting. People are talking about appraisal contingencies, and they're saying, yeah, but why would I accept an offer with appraisal contingencies? I got 30 other offers. Market. Laura's coming from New York City, talking about what happens when Brooklyn moves out to Long Island. I think we're seeing a lot of that right now. When Chicago moves out to Downers Grove, and when New York City moves to the Poconos, and when people move out to the country and they kind of take their big equity with them, and kind of just it messes everything up for all the people that are kind of in that neighborhood all the time. Let's see here. Man, we got so many good comments. Faye, I've seen it on many occasions. Sellers will request the buyers to agree to pay the contract price even if the appraisal doesn't come in at the time of contract negotiation. So we got people talking about the inspection waiver. Let's get into this here, because we've got people talking about the inspection waiver here. As discourage our clients to not to waive inspections or appraisals. Both are a big risk. We've got a top 6 here. Our buddy Michael Bailey put together a top 6. Okay, so we're running a little over on time, but we're going to do this lightning round. Top 6 reasons why borrowers may object to accepting a property inspection waiver. This has to be the longest title of a top 6 we've ever done. We've actually never done a top 6. This is the best top 6 off the bat that we've ever done. Top 6 reasons why borrowers may object to accepting a property inspection waiver. Michael Bailey, number 6.
Number 6, my company is paying for it, so I want it. So this means I'd rather have an appraisal
Every benefit, right?
for it. They still want it. It's a benefit that they feel that they want to get. But remember, these people, you're not going to be eligible for a waiver unless the value is deemed to be the purchase price. So, that's one of the big ones there. Number 6.
Nice. Number 5.
To be eligible for a possible future loss on sale benefit by my employer, I'm required to get a full appraisal.
Wow.
Which is, something you want to think about. This is also really an educational piece. Really, the employer could be looking at the closing disclosure on the property, and that would show the purchase price. And we could also provide something to the borrower that shows that they were eligible for that waiver. So you definitely don't have to have that full appraisal even to be eligible for a home sale benefit.
Chris, are you guys consulting with transferees about this to be eligible for a future loss on sale benefit? You have to get the full appraisal?
Loss on sale is kind of, it seems like it's from days of long ago, honestly.
Ain't nobody losing money on a sale these days, right?
But certainly, I mean, like I said, at some point, we might see a reversal of trends here. And so, yeah.
Yeah, I mean, in 2 years, we might see a lot of loss on sales coming back, right? Yeah.
Mm-hmm.
Sorry, Gabby. Didn't mean to be a downer.
Oh, no. I think this is, it's a tough point, but I think it's an acknowledgement from a company perspective that there's so much mobility that we may put a person in this location, but need them to move to this location in a few years. And we need to think about that now.
Yeah.
It's a good acknowledgement.
Number 4.
I want to have the appraisal report in my hand to show the value. Okay, so this is kind of old school. This is people that actually want an appraisal just so they can hold the paperwork in their hand, knowing that it's worth $500,000 as opposed to just the purchase contract at $500,000.
Yeah, I mean, I'd like a piece of paper saying something's worth $500,000. Seems like a nice receipt to keep. Number 3.
My real estate agent or relocation consultant said I should get a full appraisal. So this, again, is really an education piece. We need to, more real estate agents, more relocation consultants are understanding the value and the benefits of getting an automated valuation versus a full appraisal. And once again, you're not going to be eligible for an automated valuation if the investors, Fannie and Freddie, feel that property value is not there. If it's not there, you're not going to get that waiver option. You're going to have a full appraisal.
Awesome. Let's see here. Cheryl has, she has such a good, let's see here. Property inspection waivers are available if home is valued within range, not when offering 50 to 60K over asking of neighborhood. Realtors should be aiding in proper offers and opinions of value. Yeah. PIW also requires a significant down payment. There are stringent lending requirements. We are not looking at 2007 lending when the subprime lenders were giving money to anyone with breath. I'm going to play Jack Champel. Yeah, but I don't know. Number 2.
Number 2, I want an appraiser to come out to make sure nothing is wrong with the house. So this kind of goes back earlier. The appraiser doesn't look for inspection pieces. They look for the value of the property. Sometimes they will make comments or notations about something that's wrong or not safe in the property. But that's really the extent of what they do to determine if something's wrong with the house. That's why we suggest a full inspector to come out to look.
But now, what is the difference between the appraisal and the inspection?
Well, the appraiser determines value of the property. That's all typically the appraiser is for.
So the inspector is the one that's going to come out and tell me nothing or tell me everything that's wrong with the house.
That is correct. But the appraiser can also, if they notice that something is wrong, like, the old FHA, VA appraisers, if the sidewalk was crooked or the cement was crooked, they make you fix that on those type of appraisals. But those are the types of things maybe an appraiser will say, well, this front porch, there's too much of a drop and there's no guardrail on there, so you have to put up a guardrail.
Are you reading my appraisal, my inspection? Is that what you're doing? Yeah.
But those are the things that inspectors really should be pointing out, not necessarily the appraiser.
Yeah, the inspector, it gives me 40 pages, and the appraisal's like, it looks good to me. Number one.
And number one, I want to make sure I'm not overpaying for the house. And another thing is similar to that is I want to make sure, hey, if I got a good deal on the house, I want to know if I got a good deal on it. So I want the appraisal that way. If I paid $500, I think it's worth $520. I'm hoping it comes back at $520. But again, this one, the comment, I want to make sure I'm not overpaying for the house. If you're overpaying for the house, you're not going to get an appraisal waiver. You're going to have a full inspection done on the property. And then based on what that appraisal comes back at, you can determine, do you want to pay that full purchase price? Are you willing to pay that premium, especially if there's a bidding war going on? That's a decision that you as a buyer need to make, whether you want to possibly overpay for a house.
This is awesome. I got one amazing question over here that I actually want to ask y'all before we kind of go to final thoughts here. We got a bunch of people on LinkedIn. This is fantastic. Hit that like if you haven't already done so. Hit that round of applause for our wonderful group here. But Elizabeth Presner-Soley says two things. She says, I'm refinancing and getting a 2.75. She says, Michael, can you beat it? No. She said, how long can rates stay this low? She's also like secretly saying, DM me if you want to. And then she says, this I think is, nobody's talking about this. Everybody, I'm the only person I know talking about this right now. I'm going to talk about it some more. Elizabeth Presner-Soley says, I think mortgage companies are dealing with the financial impact of COVID. I know people who have taken 6 months where they didn't have to pay their mortgage. I took 4 or 5 last year, but they just extended the mortgage by 6 months. So due to the CARES Act, and I don't know, Michael, I don't know if you guys get in this because you do a lot of relocation mortgage. I'm not sure if you've dealt with the CARES Act on this or not. I'm sure you have. You have mortgages. But point is, due to the CARES Act, if you were impacted by COVID, you can take 6 months of not paying your mortgage, and you can do a forbearance on it. And then, oh, by the way, at the end of 6 months, you call them back and you say, yeah, still got a problem. Oh, okay, fine. Here's another 6 months. So you can take up to a year due to the CARES Act. Now, if that came into being, I don't know, March, April, May of this past year, then people's 12 months of CARES Act forbearance, which, oh, by the way, then gets converted to a deferment at the end and slapped on at the end, like Elizabeth was saying, which is amazing, a year of no mortgage. What impact is that going to have on the mortgage market, but maybe even more so on the housing market and availability and prices?
Yeah.
Thoughts?
Well, from the mortgage perspective, I can tell you that, yes, it did come out last March, April, and around that time frame. If anybody wants to purchase a home now and they have their existing home where their mortgage is in forbearance, it has to be out of forbearance. You cannot currently be in forbearance and get a new mortgage. So you have to make sure that that is up to date. So
you need 3 months, because I'm going through this now. You need 3 months of consecutive scheduled payments, I believe.
Yeah,
you do. But I mean, so from a mortgage standpoint. But now let me ask you all, whoever wants to take it. And Elizabeth says, great point. Jack's like, see, I knew there was something going on. No, but now, okay, let's play this through, right? So, impacted by COVID. I'm a restaurant worker. I own a bar. I own a daycare. I don't know what I own, but anyway, point being is, I go for my 12 months and I'm not paying my mortgage, and then now May pops up again. Circumstances are still the same. We're still in COVID. I can't pay this mortgage, this $3,000 mortgage or whatever it is. Now I got to sell my house.
I would just say, we have yet to feel the full impact of what COVID-19 is going to do to the economy at large. And there are so many different things. The ripple effect has to be tremendous. I don't think we're even close to feeling it right now. At some point, somebody's got to pay for this, right? And it's going to be all of us collectively. And what is going to happen? Again, I wish I was smart enough to tell you that, but I'm sure I can tell you that there is going to be a ripple effect that is going to be pretty severe.
So I wish I knew what the numbers were for the forbearance. I know they were kind of high at the beginning, March, April. And and then they leveled off a little bit. But I honestly don't know what the current numbers are. But it is, something we need to be looking at for sure.
Can somebody Google that? What percentage of mortgages are currently in forbearance under the CARES Act? I thought I read something like 1 in 8. But Google that and put that in there, because Gabby, here's my strategy, okay? Because we're kind of in the same boat, two sides of the same coin, right? We're looking at buying a house. All right, I just sold mine, and we're both going to be looking. Here's my thought, okay? I'm going to sell my house, take the profits. I'm going to go rent in Allen, Texas, by the way, Victoria McCullough, to answer you. I'm going to rent for 1.5 years, 2 years, and then hopefully prices are going to come down, and that's when I'm going to buy in again. That's my thought. So that's what I'm doing. I know this is how you want to hear, Gabby.
No, it's a good one. We're going to actually keep our house. It's actually a duplex, so it adds a little bit of complexity to the whole situation. But yeah, everybody's got to have their own strategy in this unique environment for sure.
You may see, it's kind of weird, it's kind of counterintuitive, but I'm wondering if you may see. Oh, and by the way, after CARES Act is over, you can't evict somebody for like another 180 days or something. I forget what the number is. So you might actually, if people are coming out of it in March, April, May, you may see another 6 months. But I think you're going to see in Q3, Q4 more houses hitting the market. It might actually lower the asking prices, but I don't really know.
Yeah, definitely.
So, guys, I want to go around the horn real quick here and just kind of give everybody the opportunity for a final word. I know we went long. This is a really meaty topic that touches everybody, either professionally or personally or both. So I just want to go around the horn kind of and get a final thought maybe from each of you. Chris, would you start us off?
Yeah, I would just say that buying and selling a home, I think I said this before, but I think it bears repeating. Buying and selling a home is such an emotional process. And very often, or I should say, not very often, do people really put their thinking caps on when they're going through, all the different chains of events that are going to take place, including the appraisal process, including the inspection process. And as a buyer, I would say don't waive your rights to get a full in-person appraisal, to get a full in-person inspection, because that is really, you're protecting a very large investment.
Great piece of advice. Michael Bailey?
All right. From the mortgage perspective, I'll take a little bit different view from Chris, but from the mortgage perspective, there's a lot of efficiencies that are created not only from the lender's perspective, but from the buyer and everything else when it comes to the appraisals. For some people, it's not going to be right to do an appraisal waiver. For some people, if it's a perfect opportunity to take advantage of the benefits you can get from that, don't be concerned or worried about it because the value is there for that inspection waiver, the property inspection waiver, if you are eligible for that. So consider taking that.
Good point, Michael. Gabby?
Yeah, I just have 2 closing points. One, temp housing. I wanted to just reference that quickly. And that's, it's a huge meaty topic, but corporates out there, think about your supply chain and your temp housing considerations as corporate relocations really, here, Jack, perfect, thank you, is relocations on the corporate side start to explode, and they will, maybe fall, maybe summer, we're still watching and waiting, but they will explode around the same time. So let's think about our supply chain, think about our temp housing, and then their supply chain. This comment, I haven't read it, but it's I'm sure it's right on point. So let's think about that. And then lastly, Milwaukee, if you have a house, give me a call. Give me a call. That's it. That's it.
I love it. Jack with the great points here. And I'll actually give Jack my final word here. Jack Gempel says mortgage forbearance reached a peak in May of 2020 with more than 4 million U.S. mortgages in forbearance, which represents about 8%. So I was wrong, not 1 in 8%, which I don't know, was that 1 in 12 of outstanding mortgages and $1 trillion in mortgage debt. Overall, through forbearance, homeowners have delayed about $4 billion in mortgage payments each month.
Wow.
So that's very interesting. And Jack, with those thousands of pent-up relos, that could definitely offset some of the pent-up sales of homes. So this was great. This was super applicable to my personal life. Gabby, I hope you found it interesting as well.
Definitely.
Thanks everybody that tuned in. I loved your comments. Y'all were super active. We had like 40 something people on LinkedIn. It was really cool. A bunch of people on Facebook and YouTube. That's awesome. Hit that like button, hit that round of applause. If you haven't done it already, go to loveandrelo.com/community. Register for our wine giveaway. We're going to be giving away 2 bottles of wine that Janet's going to handpick on Friday here on the program. So last week it was Jason Rollins and Zach Stevenson, I think, that won couple of good bottles. So go ahead and register for that, loveandrelo.com/community. Michael Bailey from Premia Relocation Mortgage. Thank you, sir, for being here. Appreciate you.
My pleasure. Thank you for
Chris
having me.
Lagerman, my good friend from WHR Group. It's good to have you, sir. Thank you for being here.
Always a pleasure, Ben.
And Gabby, thanks for always asking the great questions. I really appreciate you so much.
Thank you for having me. This is a great topic.
Take care, everybody. We will see you tomorrow bright and early. I believe it's 10 a.m. because we're interviewing Sean Collins from Singapore. These Singaporeans, they insist on the early. I have to tell you what. No, but it's going to be great. It's going to be really awesome. We're going to be talking about talent mobility, talent strategies, right? So how to get a better job, improve your career, what opportunities are out there. So tune in tomorrow morning, bright and early, 10 a.m. Eastern Standard Time here in the U.S., and we will see you then.